The markets seem rather happy with the arrangement thus far. If you look at IMF, today they said global growth moved from 3.2 to their forecast of 3% for 2019. The U.S. from 2.6 to 2.4, and for the EU from 1.3 to 1.2. Your thoughts on stage one and how it may impact the trend of the forecasts we see coming from many places, slowing down, including the IMF?
First of all, stage one was positive to a degree, but we don't know how positive because we don't know what the details are. And in trade, having been a trade negotiator, the devil is in the details. So we don't really know how much China's going to buy in terms of agricultural goods. And also, even though the October 15, today's tariff increases have been put on hold, we don't know what's going to happen in December when a new round of tariff increase is threatened. So while this agreement, to the extent we understand it, has given the markets a boost, it has not eliminated the kind of uncertainties that the business and the trade community have been troubled by and which have put a lot of investment and trade decisions on hold. We don't know what's going to happen on tariffs, and we don't know what's going to happen on a wide range of other issues. This is phase one, but a relatively minor phase one, positive but relatively minor. Lot to go.
Now, having said that, Bob, and it makes complete sense to me, and I'm sure it makes complete sense to viewers, but if you take an S&P 500 chart and you draw a red line horizontally right at around 2,900, you'll find whether it was a year ago, 6 months ago, 3 months ago, or 4 days ago, we're never far from that level, and that level isn't far from all-time highs. Not a bad place for us to rest during such high uncertainty, is it?
No, it's quite remarkable given the uncertainties. It may well be that the uncertainties are abated for a period of time. Maybe there's a Brexit deal. It looks a little bit better. There's a mini deal with China. All these things, it seems to me, are, at least in the real short term, reducing uncertainties. It's the medium term that I think people need to be considering. But you're quite right, given the uncertainties, and they're all over the world. Now we've got the Middle East, another set of uncertainties. So the market's been very resilient in the face of these uncertainties.
Now, Bob, you've been around the block a few times, so have I. When was the last time you remember where everything was completely certain? I mean, doesn't it seem like we're getting a little lost in semantics here? Let's get to a new topic. Tell you something that's changed in the last couple of weeks. Global interest rates really started in Europe, which in and of itself is shocking, but rates are much higher than they were a couple of weeks ago, but still at a low rate. But the rate of change has quickened rather dramatically. Your final thought?
You're quite right. First, just one point on the uncertainties. We're used to uncertainties, but when you have the possibility of an escalating trade war between the United States and China, the world's two biggest economies, that's a level and an extent of uncertainty that we haven't really had in the recent past, at least. On the interest rate
Bob,
point,
we're going to have to leave it here on interest rates.
You're absolutely right on
We'll pick
interest.
it up on another time.
You're right on interest. It's moving in a different direction.